One surefire way of increasing the risk of your business failing is to have poor financial records. Just by having your financial records look a bit more like this rather than that, and you're going to materially increase the chances business of success. Welcome back to the Basics of Business channel, everybody. I think one thing we would absolutely agree on is one of the key basics of business is having financial control over your business, not necessarily financial health, which is probably a slightly different thing, but just basic financial control. Something businesses a lot just put in the back burner for some reason, or just and don't even exploit the value of just having good financial records. When you've been an accountant and advised business for decades, from startups with nothing through to businesses with tens of millions of turnover, you're very clear in the sort of the three key things when it comes to financial record, good financial record keeping and having financial control.
Yeah, absolutely. I mean, I'm an accountant, so maybe I'm biased and trying to justify the existence of all of us. But to me, keeping good records for three reasons, really. First of all, just basic compliance, just keeping a record of what is going on in your business, whether that's just a simple cash book, whether that's using sophisticated software, depending on the complexity of the business, but making sure you know what is going on, where's money coming from, where's it going to, is there any left at the end of the week, month, quarter, whatever.
The basic as is.
That is as basic as you can get.
Yeah.
So that would be the first one. The next bit of, if you've got good historic records, you can use that to try and predict what might happen in the future. So you know that this time last year, A and B happened in your business. Can you use that to predict what's going to happen this year? Can you use that to predict how the business might develop, get bigger or get smaller or whatever your cost? So having good historic records helps you then get better.
So your forecast, and in terms of if you've not got a business yet and you're just, all you're doing for a business plan is doing the same thing, except you don't have any historical data.
Exactly.
You're guessing more, but it's the same, exactly the same
thing. They're all estimates. Yeah. And if you haven't got historic records because you're just starting, or if you haven't got historic records that are good enough for you to use, your assumptions that you're having to use in your forecast are obviously much less able to be challenged, and are much more on guesswork. Right. Whereas if you've got historic records showing what's been going on, and you say, actually, I have 100 customers spending £10 a month with me, my assumption is I can grow that by 10% over the year, so I will have 110 people paying me. But if you just go, oh, I get £1,000 a month in my account, so you don't know it's 100 people paying a tenner. Your assumption of, well, I'm going to, you might still say, well, I'm going to grow it to £1,100, it's 10%. But is that because you put the price up, or is it because you got more customers? And even as basic as that, if I put my prices up by 10% and got 10% more people, what would that do to my revenue? And it's based off, this is what I am achieving, this is what I'm going to do. Whereas if you haven't got the records of what you have been doing, it all just looks more like guesswork.
Yeah, but if your assumptions are good and you've done your market research, etc., then they can be pretty good assumptions.
Yeah.
And then it leads us on to the third element. If you've got both those things, then you can compare the two.
Yeah.
And make, okay, that's what we predicted is going to happen. This is what's happened. You then get into beyond the bookkeeping, that's where the sort of accountancy element.
Yeah, and there's two aspects to that. One is by having good records, you've got your forecast. When you compare, on the one hand, that will help you make even better forecasts because, this is what I thought was going to happen, but this is what happened. So what does that mean in the future? What is going to happen in the future? So you'll be better at forecasting, but also you've got more chance of improving the performance of your business. So this is what I thought was going to happen, but actually this happened. So what can I, and it might be better or worse than you were expecting. If it's better, well, that's better. How do I make sure that carries on? What can I do to make it even better? And if it's not as good as you were hoping, why? What can I do? What can I change? How can I improve? What is going on to get to where I was hoping we were going to be? And that, in a nutshell, is then we come on to, as you said, it's financial health, but having the financial records, having the financial controls will help you improve the financial health of your
that
business.
bit that everyone is really boring, I'll put it off, can give you some amazing data in terms of looking at, as you say, as in sometimes it's good, sometimes it's bad, but you're then, the confidence that gives to make decisions off something that you know is right.
Yeah.
You've gone through the process, can transform a business.
Yeah, and we're going to run through some videos around the sort of the real basic compliance and how that can be expanded. And I think the reason for that is to make sure that people watching this channel can make a decision around how much of their own time, how much of their money are they going to invest in these systems. And I am a believer in that. You don't want to create an all singing, all dancing back office accounting system until you've actually proven that you've got a business that requires it. But that is the more detail you have, the more data you have, the more nuggets of information you will get out that will help you in the future. But to start with, if all you've got is the basic cash book, which we'll come on to, of this is what came in this month, this is what went out this month, I've got this much left over, I'm making, it's positive or it's negative, I know what to do. But actually, the more information you had, so where did the money come from? How many customers have you got? Which customers pay you the most? Which customers use you more often than others? All of that level, when you really get into the sort of granular, real detail of with larger businesses, that is useful. But as I say, that isn't day one. Day one, you've gone, you've got your minimum viable product, and you're doing all of that. You're just trying to see, has this business got any future at all? But you still got to make sure you're capturing the right information there for you to know whether the business has a future.
So those were the key three elements of the what and why we're born. In terms of moving on to the how you're going to do it, obviously you've talked about there, if you are a startup, how are you going to do it, or not even started yet and doing your business plan, it's the same principles versus a more complicated business. How you're going to do it at that early stage, it can just be a spreadsheet. As simple as that.
Yeah, and we're going to do a series of videos now sort of showing the most basic cash book spreadsheet. And then we're going to expand that into the ledgers using a purchase and sales ledger with a cash book, which is a sort of double entry manual accounting system. People may not want to do that because it is, it is proper bookkeeping, but understanding the information you can get from that, A, you might want to choose to do it yourself, but B, you'll then know what you want to ask your bookkeeper to do, or what you want to ask your accountant to do. This is the information I want to have every week, month, whatever.
That is relevant I know the giving names of it, but you advise, like big businesses, and these things are never change. They're vitally, even if you're bringing in £10 versus 10 million, it's just different size numbers on exactly the same platform, whether that be a spreadsheet or a tech system. It's exactly the same thing. And I say, if you've not started yet, the business plan, and this would be the financial section of the business plan. Again, it's just exactly the same.
The basic principles of having good financial information and using that to make better informed decisions, that applies across the board. And if you are a very simple business, it's just me as a freelance graphic designer or a dog walker or whatever, a simple cash book may be enough. As you get bigger, you're going to need some form of ledger. You're raising invoices, people are paying you in 30 days' time. You're going to need to have a record of, well, who still owes me money? Did they pay?
Yeah. And as a small business, late payments can be a real challenge, which makes cash flow. Yeah.
And if you've got hundreds of customers, trying to do it on a spreadsheet will be quite time consuming. That might be the point to say, well, actually, I'm going to actually spend money and have a subscription with Xero, QuickBooks, Sage, whichever one it might be. And then as your business gets more complicated, if you're dealing in different currencies, you're dealing around the world, you wouldn't be able to do it on a spreadsheet. Well, probably in theory you can, but in practice you wouldn't be able to do it on a spreadsheet. And some software wouldn't necessarily be right for you, because not all accounting software deals with everything in exactly the same way.
So then if we move on to just sort of some general basic tips in doing this, as in, I think number one, we would always say separate your business and your personal stuff, and the simplest is to have a business bank account.
Yeah,
we've got that other video, we'll put a link up there where you can see there's 9 that we've compared across 6 different categories, but that is an easy, simple, quick win to make things easier.
For various reasons. It makes the amount of work you've got to do less, because none of your personal expenditure or whatever has to get recorded in your books. And it just makes life a lot easier, because it's only the relevant data that you're having to work with.
Do it regularly. Don't sort of like wait to the end of the year. No, and a bit of it is yes, because it's monotonous. Therefore, doing it in a chunk or whatever, and doing it weekly or monthly breaks that up. But also, as we all know, businesses rarely go to plan. Well, never, basically. So that when something big comes up, and like the most recent is probably COVID, and that puts a huge stress on business or whatever, if you're then fighting at the same time to catch up with your financial control, adding to that stress, that can just make things, whereas if you're doing it regularly, great, we can just we're a week behind, get it up to date, and then we can deal with what COVID's going to throw at us. If you're not up to date, it just would add massively to the stress.
Yeah. I mean, having up-to-date information then allows you to, again, make better decisions around the future. You know, if something like COVID happens, or a big customer tells you they're going to stop using you, understanding what is going on in your business will help you plan and react accordingly.
And the last sort of quick tip we'd probably say is just simple of budget for taxes. That's one certainty, as we all know, there's going to be tax until whatever your business is making, whatever, there's going to be tax. It's typically paid later on, post your account's done. So therefore, from a cash point of view, putting some money aside for taxes.
The tax man is, quite rightly, as a taxpayer, because it's my money, if you like. You want him to be collecting the money, and they're fairly unforgiving. They'll give you a bit of time to pay, but their view is, you knew there was a tax bill coming. Why haven't you set money aside to pay us? Why should we give you any longer?
And the simplest way to do it, which we do, is just like every month, first of the month, money goes into a separate savings account or just another different business account, and you just know, or pots, like I know Monzo and other banks now do, you can have separate pots within your same company, same business account. Just start of every month, just stick some money away in there for taxes, so that when the bill inevitably comes, it doesn't cause any sort of cash flow problems.
Exactly.
So hope that's been helpful in terms of the basics of financial control. As I say, we're going to move on and go through sort of examples of spreadsheets which you can download and use yourselves on a variety of topics to give you that financial control. There's links to those videos now, so click on one of those and we'll see you on another video shortly.